Hi everyone, quick disclaimer. ASX, myself, a master of the market, is an authorised representative of ShareX Australia, and this content is for general educational purposes only and does not constitute financial advice. A little bit about me. I've got a Bachelor of Education. I was a primary school teacher for over 10 years. I'm a certified financial technician through the International Federation of Technical Analysis and certified level 1 Elliott Waves through Elliott Wave International as well. All right, let's get into it. So before we start, I want to do a little bit of education so then you understand why I'm taking some of the trades that I'm taking this week. Okay. I'd rather show you why I'm doing it so then you can implement it yourself instead of just copying. So how do markets move? If I were to ask you that question, most people would think this, or they would hope this. If you're on some meme coins in crypto, some of them may move like that, but they don't move in a straight line. I know the minute we buy something, we want only green. You know, we might even get green straight away, but then we get upset when we get a red date. But that's because markets, they zig and they zag. That's how they move. They zigzag, zigzag, zig. There's actually a way to understand the zigs and the zags to actually then capitalize and make it so that you can get really good entries on stocks or crypto. So zig and that zag. This zag here, you can actually use Fibonacci to find the most probable area or zone to take an entry. Okay. And whenever we're trading, whenever we're buying something, it's always about stacking the probabilities on our side. And the majority of the time, so keyword the majority, so 70, 80% of the time, when something zags, it comes down into what's called the golden pocket, this Fib 382 to the 618 zone here. Okay. Sometimes it's more shallow, sometimes it's more deep, but the majority of the time it falls into this golden pocket zone here. And I'm going to use, what was the number one stock until Nvidia recently took it over, but Apple. Okay. So zig, zag, and once they get bought off the zag zone, they zig again. Okay. So you can actually identify where they don't. So Apple here, this here was the tech bubble, and you can see you've zigged up, and then when you've changed market structure come down, where did it come down to? The zag zone, and it bounced off the 618. So if you had known that back in the GFC, what seemed like a massive bad deal, the GFC, all it was doing was correcting the move from the bottom of the tech bubble. So it was correcting a 5-year zig, and then it zagged down to the Fib 618. Then again, from that move there, GFC, it zigged, and then it zagged down to the Fib 500. And then that was the 2014 low. Then from there, it zigged, and then it zagged, and again came down to the zag zone in 2017 or 2016. Then it zigged again, then it zagged and bounced off the Fib 618 in 2019. Then it zigged again, then it zagged and bounced off the Fib 618 during the COVID drop. So again, what seemed like the end of the world, oh my God, COVID, all it did was correct that move there, zigzag. Then again, from the 2020 low going up to the 2022 bear market, that zag just came down to the zag zone of the Fib 302. And then recently from the 2000 bear market, we zigged, and then we zagged again into the golden ratio here. And then now this is where we're at right now. Okay, so whenever you're in a strong trending stock or crypto, it will get eaten off the zag zone. And that's what I'm always looking for, knowing that the market zig and zag, and that's when I look to get my entries. I'm now going to apply that to a trade that I've taken recently and talk to you about why I'm looking to take that trade using that strategy. Okay, so here before I move on, Apple, you can see these are all those boxes I talked about. See, bought, 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 bought. So Apple remains in an uptrend as long as they're buying off the zag zone. So if this was to come up, then all of a sudden roll over, and then it's not getting bought off that zag zone, that's when you know something's up. Because since the 2003, since the tech bubble, buyers have been stepping in every time off the zone where they're supposed to step in, because we know markets are supposed to zig and zag. And there's an old saying that I always say is, if you can't handle the zag, you don't deserve the zig, because that's how markets move. Okay, they zig and they zag. If you can't handle that, you don't deserve the next zig. If you can't handle that zag, you don't deserve the next zig. All right, so you need to understand that there will be periods where you're holding zags and you're holding what's called the counter trends or the secondary reactions to the primary move. All right, a trade I've taken recently is FMG. Okay, you're probably looking at this going, what have you done? This was a shorter term trade, because what I'm trying to do is teach students at MTM how to focus on one thing at a time. Okay, because what happens is sometimes you get a really good entry on a stock, and then you go, oh, I got the entry, awesome, forget about it. Then you go and find the next one. Then you go and find the next one. And then you forget to follow the first one. It's like trying to have too many girlfriends. You can't please them all. You've got to make sure you give all of it to one. Once you've proven that you're profitable just trading one stock at a time, then try two. Once you can prove that you can trade two, then try three. So if you find that sometimes you're getting really good entries, but you then, you might be up 20%, then all of a sudden you give back all your gains, it's because you're getting too distracted and you're trying to be on everything. All right. So this one here, I'm going to zoom down into the hourly. I'm actually going to zoom down even more into the 15-minute. So from that, knowing that strategy that I've just shown you, you can see here that we've had our zig and then you've had your correction here. So if you then get your fib, so from the bottom here, take it up to the top, use your fib. Can you see how that correction there, all it did was do what it's supposed to do and come down the zags, and it bounced off the fib 382. Okay. Then from there, so I'm going to remove the fib now so it doesn't get too messy, but you can see that's the zag zone. Then from there, you can see we've come up here, and then same thing. If you take it from here to here, you can see what did this do? It got bounced off the zag zone, it bounced off the fib 500. So zig, zag, zig, zag, zig. Okay, so for me, what I did was take an entry on the breakout here, because what we've had is a zig, zag, zigzag, zig change of market structure. So that's where we changed market structure and turned bullish. From there now, I'm now riding this until we get up to the next move. So personally, what I think it's going to go up to is, I'm just going to zoom out a bit, is I think we're going to get at least a move up a bit higher, and we're going to come up to up around here. Okay, and that's really where I'm looking. You can see this is that big resistance support zone that aligns with the 618. That's where I'm looking to go. Although if it changes market structure along the way, I'll be looking to take profit. Okay, so all I'm doing, this is why people always ask me for targets. I don't like to give targets because I know the target, but I know when people are asking targets, they don't know how to trade, and what they do is they hold on that target for dear life. That's my target. However, I ride the market structure until it gets there. If it changes along the way, so if this is zig, let me just get rid of that. If this is zig and zagging along the way, my target's up there. If it falls short and goes like that before it gets there, I'm not going to hold because I said the target's there. I'm going to exit the minute the market structure changes. So you've got to understand, that's my zone where I think it will go to, but I ride the data until it gets there. Then I just know, okay, that's the zone where I'm looking to take it. So playing all this back, I want to then tell you more evidence as to why I took this trade as well. So coming back to the 15-minute. So you got zigzag, zigzag. So on top of that, you've also got what's called hidden bullish divergence as well. So here to here. So a lower low in price, a higher low in, lower low in RSI, and a high high, which is hidden bullish divergence, which is continuation of the trend, which is what we got. Okay, so that was another thing for something I like to look for breakouts. If you get the higher low and the lower low there, because it confirms the break. Top of that, good volume on the breakout as well. A little bit of sell pressure now, but all good. So now I want to show you, again, the minute you buy something, you need to know where you're getting in if you're right, where you're getting out if you're wrong. Sorry, where you're getting out if you're wrong and where you're getting out if you're right. I've told you where I'm getting out if I'm right, which is up that zone there. Okay. All I do is ride the market structure until it gets there. So I might get out earlier, but I'm hoping it gets up to there. What if I'm wrong though? What if it goes against me and it doesn't get anywhere near there? What if it rolls over I need to know where I'm getting out. So this is where you then know, where's my invalidation levels? When's my reasons for getting in start to get rejected? So if we know zigzag, zigzag, all I do is apply that same thing now. So from this move here, zig, zag, you can see that move right there is that 3HE618. I'm just going to get rid of this one now so it's not too messy. So if we're applying the normal zigzag strategy, buyers should step in this $19 to $18.80 zone because that's what they've been doing so far. So if they don't, again, something's changed. I can also then draw just a nice basic trend line going up here as well. Okay, we can see buyers have stepped in off this trend every time as well. So again, and you can also see resistance. Resistance should become support. On top of that, there's a little rule in Elliott wave, which is wave 4 shouldn't enter wave 1 territory. So that's wave 1, wave 2, and this should be wave 1, wave 2, which means that this should not come, wave 4 cannot come into wave 3 territory, or it cannot, it invalidates it as well. So this little area right there, that 1880 level, is my level where, okay, if buyers aren't stepping in there, something's up, okay, because sag zone, resistance support flip, trendline support, and wave 4 coming into wave 1 territory. Okay, so this is wave 3. It should be the biggest move. It should not come anywhere near this territory. Good thing is I got in at that price, so all I'm doing is taking a really tiny small loss. Like 1% is 18 cents. I know I'm going to be losing it. So I'll be losing like 0.1% of an amount. So what I'm actually looking for from there as well is what's my risk to reward. So if I now backtrack that trade using my long position, so I got on there, got a stop loss below the pivot low there, and I backtrack it up to where it's going, I'm looking at that. So this trade here is a 14 to 1. And I always base everything off a $100,000 account because it's really easy for people to, with percentages, 100%. So you're only ever allowed to risk one, maximum 2% on a trade. So that means that if I've got a $100,000 account, if I'm wrong, I lose $1,000 if that stop loss gets hit. However, if I'm right and it goes up to my target, I'm actually growing my account by $14,000, so 14%. That's a 14 to 1 trade. So when you do trades like this, you've only got to be right 10% of the time to make money. I'm always aiming for 3 to 1 trades minimum. So which means I need to have 3 times more green than red, because what you do is you stack the chips in your favor by doing that. I'll show you what I mean. Okay, so this here is all about risk reward win rate. So when I say I'm looking always for a 3 to 1 win rate, to be profitable, you've only got to be right 30% of the time to be profitable. So you know how this one's a 15 to 1, 5 to 1 is right 20%. So you can imagine, 15 to 1, you've only got to be right like 7% of the time. I don't normally have bigger ones like that, and it might not get there. It might only be less. It might only be 6 to 1 or something to here. But you get in the idea. The minute, if you're doing only 1 to 1, trades like that, then you've got to be right 60% of the time to be profitable. I don't want to work harder for my money. I want to work smarter. Okay, it's all about working smarter. I don't want 2 to 1 trades because I've got to be 40%. Okay, yeah, I don't have to be right. I can be right less than, but again, I've got to work harder. If you notice 3 to 1, 4 to 1 are pretty much the same. So that's why I always look for a 3 to 1. If I don't have 3 to 1, I do not take the trade. That's it. That's my rule. Oh, but what if I miss it? Sweet. There's another one. Okay, there's always another trade. Never force anything just because you have to be on it. So if your risk reward is not 3 to 1, you do not take that trade. Okay, so now you know where and this one will be now a break even pretty much trade because I've raised the stop to there like it was down there, but now I can raise it because I've had the move and I've got more data, but you're getting the idea of how it's kind of working. I'll show you a trade I've just done recently on par. Okay, so that was one I talked about last week. So par, day trade, go to the daily. So this one here, I took on the breakout here. Okay, change of market structure, and I got in off the level here. I got in at 26.5. I'll show you in a sec. I then took profit here at 60 cents. Okay, so I had a move there from there and had my stop loss below that pivot there before it broke out. And it ended up being a 10 to 1 trade. Okay, let me show you what I mean by this. Okay, so this was just me talking to the new group here, the October channel. I talked about I allocate small amounts to small caps due to their volatility, always limiting risk to 1%. So whenever I take a trade, if I'm wrong, I always lose 1%. And what I've been showing them is using a $100,000 trading account of my. So how I kind of run my account is I have 3 different accounts. I have long-term, swing, and short. The long-term account holds the majority of my equities. The swing account for medium-term trades and opportunities, and I'm trading the weekly swing. So that's where I'm writing the market structure on the weekly. So there's trades that go over months, sometimes years as well. Then I have the short-term trading account, which is the $100,000 that I'm always risking 1%, nice and easy. And they're always, like I said, 3-to-1 trades. So as profits grow, e.g. 100K to 130K, I lock in the 30K and move it into the swing account, into this one, keeping the trading account capped at 100K. Profits from the swing account then move into the long-term account, creating a flow where funds transition from the short-term to the medium-term to the long-term, building wealth systematically. So the whole idea is to get money from here to here, from here to here. And then this is where the majority of my wealth goes, and it just compounds. Okay, so what you want to try and do is have a job or have something that's bringing in the money to, I guess, pay for the bills, so you're not having to tap. And then all of your trading account and that is all about compounding your wealth. And this is a strategy that I use. Obviously, you can't do this with $10,000, but once you start getting more money and you start building up the money, this is a strategy you can use to start doing that. Then I talked about here that I don't believe in trading as a job because all it does is replace one job with another. You'll never truly build wealth that way. And that's what I'm always talking about. If you can do this kind of strategy over 3, 5, 10 years, you will build that wealth. You'll be surprised at how quickly it compounds the more when you're not taking money out of it. Okay, so for me, I didn't learn trading to then be stuck behind a screen every day. I did it because I wanted to be free. So that's why I don't believe in day trading and I don't believe in trading the smaller time frames, because you're just doing a job. You don't want to do a job. What you want to do is live your life and have your money work for you in the background. Okay. On top of that, it's also the most reason people fail in trading is because of psychology. And when you're trading to put bread on the table, you'll start forcing trades and doing things that go against your trading style just to make money. And again, you'll probably end up not being as effective. Okay. And then you can see here, sold out at a 10-to-1. This is on Wednesday. For, as you see, 10,000. So I was risking 1,000 to make 10,000. And that's what it's all about. It's all about risk to reward. That now was a 10-to-1 trade. Going back to what we learned about back here, remember 10-to-1, I'm highly profitable if I get only 10% of them right, let alone if I start getting 50, etc., stuff like that. Okay, and that's the trick. And then you can see there, that's the Wednesday, and then you can see, look what happened. Big red day the next day. So that's why I talked about here. Don't get too greedy. I say 20%. So the next day it started to drop and it got down, I think, 44%. So it's all about knowing not only where to get in, but also where to get out. And I had pre-planned it to know where to go. But just to recap, these are some of the trades I've done. So again, first trade was Evolution went 7-to-1 risk reward. So I grew my account 7%. Second trade, min, I was wrong. Third trade on min, I was wrong. So now I was up 7%. I'm now up 6%. I'm now up 5%. Fourth trade par, gained 10%. So now I'm up 15% total. Okay, so, and then I'm currently on Domino's Pizza, 6-to-1 trade. If that's a loss, I lose 1%. If I'm right, I win 6%. Then I'd be up 21%. But can you see how I've actually only got 2 out of 4 trades, which is 50% accuracy, which is like, that's not great. But my account is up 15% because of the risk to reward. So you've got to have that minimum 3-to-1. So I'll go back to DMP and show you where I'm at on that one as well right now. So same thing. Using the strategy that I told you guys out here, you can see here you've got a nice little wave 1, wave 2, wave 3, wave 4, wave 5. So zig, and then we zag to come on down. I'll just show you how I need to get in. So from here to here, you can see that you've got your zag zone. So zig, zag, buyers come in here, and I was able to get in on the change of market structure. So higher high, higher low, higher high, change of market structure, off the zag zone, I take an entry, stop loss below. Okay, and that's it. So again, currently it's up, and what I'm doing is riding this market structure until it. This isn't the area that I identify where it could reject. So if it does roll over and change market structure and fall out of here, I will lock in profit. And then it just becomes a small win of a 2-to-1 trade, which, you know, I've still doubled my money. Not what I'm hoping. I'm hoping it gets back up further and gets up to around, my target's up around here. So it was around back up there. So I'm looking for about a 10-to-1 trade. I thought I said I had 6-to-1. Where's the 6-to-1? Oh, actually, I'm just targeting the 618 zone here. So that's where I'm looking there, which you can see here is old resistance, support, resistance, again, resistance at the fib 618. So that's what I'm targeting. Risking 1% to make 6% in and out. Because again, I bet you so many times you take a good trade, it goes up and then boom, and rolls over. It's like you just got to identify, take profits as long as you're meeting your 3-to-1 ratio. All right, enough education, guys. Let's get into the chart. So NVX, I know this chart was looking so darn good. And then bloody capital raise came out. To be honest, it hasn't changed anything on my end yet. So again, it's really funny. This thing was up, I think 30% here, and then it was down 20-something%. Everyone started panicking. I'm like, you do know it was up 30% yesterday. It's actually still up from the, but anyway, let's have a look at this. So again, going off our zigs and our zags, this is why we were looking at the entry last time. If anyone was looking for a short-term position, you would have nailed it. You would have got the entry of the 618 and taken profit back at the resistance here. So you would have had a really good risk to reward from there to there. Long-term trade, this is what we're still looking for. So we do not want it to go below here. So at the moment, what I think it could still be is expanded flat. So 1, 2, 3, 1, 2, 3, and then you could still have your move down here and then go do something like that. Personally, I'm going to be locking in some profit if we do take out that pivot low there, because you can see buys have stepped in there and there. I'm still in from here, back at 56 cents. So I'm still up in really good profit, still up about 30%. I'm sorry if anyone got in here. Capital raise is part of the game. It sucks. But yeah, it's still good. Yeah, and personally, I haven't sold a single one yet. If it goes below there, I will take partial profit just to lock in something, and then the rest of my stop loss will be under there. So pretty much that partial will cover the cost of the stop loss there as well. So yeah, I still like it. I still think it's all right. But only if we do break those key levels do I start to worry. So going off charts of the week. So last week I talked about hydrogen. So hydrogen is still looking good here. Okay, you can see it's bounced up here still. We want to see it break through here, so keep an eye on that. HGen is the Australian one. Okay, still up here. We haven't zagged it, so we've just zigged. I'm hoping we get a zag, put in a higher low. And if it does do this, this would be a good entry. Old buys. And again, using our zag strategy from there, you can see this will be the area of interest. Okay, so look for something like that where you might get an entry off the zag zone here, and then that zag zone aligns with the old support, then you'd have a high low and boom, and then look for something like that. Sector I'm really looking at right now is healthcare. So healthcare, if we break out above here, I'll just get rid of everything and show you from scratch. So weekly. Looking at history, you can see zig, and then here you had a 4-year consolidation. See, 1,600 days. If you look now, we've had pretty much the same thing for you, and then massive zig again. So history shows big consolidation 4 years, then it pumps again. Big zig, big consolidation again, ready to pump. So what I'm looking for now is it meets our period. It's been doing nothing for 4 years. If you look here, it's been in this channel. Okay, just been chilling here. very, very similar to what Bitcoin did. Got a nice little spring here. And if we then break up out of here, so again, using our zag strategy, see how here from here to here, see we bounce off the fib 382, so zigzag, and then again from this one, here to here, fib 500, zigzag. So if we then break up out of here, you are breaking out of a 4-year consolidation, which bigger the base, bigger the explosion. So I'm looking, if this breaks up above here, healthcare is looking really good. Okay, zigzag, zigzag, zig breakout 4-year base. It will pop. After, beautiful little liquidity grab there. So buyers, 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 buyers. Oh, why does this exist? I always wonder why you break support for one of two reasons: to continue the trend or grab liquidity. Once it came back up, why does that exist? Liquidity. Major bottoms happen with springs like that. Okay, so another piece of evidence telling us to look at healthcare. Like I talked about last week, Sonic Healthcare is one that I'm on. Undervalued, I think, fundamentally as well as Neo. Beautiful change of market structure there. So got in there. So beautiful one. Yeah, so there's one healthcare stock that could be a good entry if you were watching that. CSL. Okay, so CSL here. Again, going off our zag strategy. See, bouncing off the fib 500. So zigzag, if we bounce off here now and get through there, again, pretty much the same as the thing. You can see spring, change of market structure. That would be really bullish if we broke above that high there. That's its major resistance. So CSL, that's been a bit of a dog for a while. It could wake up here if we get up through that zone and get through that 315. It won't be a fake out like all these. See how these aren't changes of market structure? Just trying to, this would be a change of market structure. Zig, ABC, and boom. So CSL will be really, really good if it can get up through that zone there as well. ResMed, another quality one. Again, you can see recently we had the bounce off the zag zone here. So you can see, again, so knowing how to buy off the zag zone can be really powerful for quality stocks because you know the pullbacks are just temporary and they can be perfect buying opportunities. Another healthcare one that I'm eyeing off, hasn't put in a reversal, but it's caught my attention, is IMU. So IMU, I'll just show you why it's catching my attention. Was an absolute wealth winner, gave it all back. It's come all the way back down to here now. Coming down quite oversold now, but if I go into the daily, you'll see what I'm seeing here. So I just noticed that this last move, we've taken out the low from there, but we haven't taken out the low on volume. So it's been coming down and lower in volume. We're starting to get some bullish divergence here. So this doesn't mean I'm buying or anything like that. It just means that it's grabbed my attention. And what I'm looking for is, you know how I showed you with CSL, the liquidity grab, take out the low. That's what I'm looking for here as well. So this major support, we've broken below this major support for two reasons: to continue the trend or grab liquidity. So if we then come up and get back up through here, that then will be a liquidity grab because of the volume, bullish divergence, and that's what I'm looking for. So if we get that, then IMU could be a good one to keep an eye on as well. But not just buying because of it. That's trading a signal, got to trade the trigger. Need the market structure to change up back through this level, but just one that's on my watch list, especially if that healthcare sector breaks out. Gore, gold miner, broke out here. So this was one that I talked about a little while ago on the weekly breakout. On the weekly breakout here. So again, you can see big zig, big zag. Which again, if we bounced off our zag zone like it should. Perfect. Zig, zag, and now we've broken out above here. Okay, so that thing's been consolidating again for 4 years, actually more than 4 years, 4 and a bit years. Massive base breaking out now. So as you probably saw before I went in there, I had that already done. So took an entry just recently on the drop here. because what we did was zig, zag into the zone, and then we've bounced off out. So took an entry off this one here, and I'll show you exactly where. Yoink. So support became resistance, change of market structure there, took an entry, stop loss below. Okay, so from there, we're now up, we're breaking out, and everything's looking good. Like the volume's looking good, beautiful volume coming in, same with the daily. Okay, beautiful increase in volume. So one of the beautiful mid-tier gold producers, that I think has phenomenal upside. So yeah, gold resources looking really good there. RRL, if you're not on that one, has broken up out of its accumulation zone here. A big accumulation. And now we've zigged. And what you're looking for is, you can see this is the zag zone. So you want to see buyers step in here. You'll also notice that that zag zone aligns with the old major resistance support zone. So this will be an area of interest to definitely see if you get buyers come in and get off there, because what it's doing is testing old resistance and support after the zig. Okay, so zigzag, boom. So look for the change of market structure off there. Keep an eye on that one as well. Now, the sector that I'm watching as well, guys, is the materials sector. So you can see zig, zag, and we've bounced off this 618, which is the old resistance support. What I really like is this here, the triangle. Triangles only happen, they can't happen in wave 2. They can only happen in wave 4, wave B. So the fact that we've had it there means that this is an A, B, C. So this should be the end of the correction, and you can just see we've just changed market structure. So I would be, you've probably all been wasted off materials since Trump came in November 5th, which was here, wherever it was, here. And then Trump came in, they got smashed. They should bounce here. I'll be surprised if they don't. That should be a zig. This is the zag. As you can see, zag zone. We bounced off the 618, B wave triangle, and now we should come up. So just waiting for that. This is where you officially get it. If we do break up through there, very bullish for materials. So although if you've been smashed by miners, don't worry. It was a short-term pain. We should bounce back here and be good. So keep an eye on, which is why I'm on FMG, things like that as well. So keep an eye on a couple of your material ones as well. So my focus this week is healthcare and materials, and because they're both looking for that healthcare breakout, and materials is bouncing off this key level here as well. As I talked about a while ago with XPJ as well, the REIT index, that one broke. We had our retest and as well. So don't sleep on your REITs as well, because they're waking up and be some good entries as well. All right, guys, I'll leave it there. One too long, but yeah, hopefully that zag strategy will help you find some good entries, learn how to improve your trading a little bit, and apply it to, if you apply it to good quality stocks, don't apply it on your penny. Like, it does work on the penny stocks as well, but they're so volatile. But you just trade some good quality fundamental stocks. As I showed you with Apple, they get bored off the zag zone literally every time. They just go up, and boom, bargain, buy. And that's just how they move every time. I'll teach you something next week around even more around that zag to help you even more as well. But I just wanted to give you a little snippet of, that there's 1% of what I teach in TA, but you can just see how just a little thing like that can really improve your game if you know nothing. If you like the video, guys, please like and subscribe, share it with your friends, and I will catch you on the next one. Take care, everyone.